the single digit WPI data that we've got after at least at least March of 2021. That's basically the data that we had, that at that point in time the data had softened to around 7.89%, and now we've got a single digit WPI figure coming in at around 8.4%. So this compares to a 10.7% in the month of September. Let's see what the internals are, because we do have the CPI data which is out this evening as well, and that is probably expected to soften to a sub 7% figure as well. So that would be important to watch out for, and let's see what the trajectory would be for the WPI data. Remember, we've seen WPI data, or rather data in terms of inflation, soften in the US as well. So maybe there is some amount of input cost inflation.
Power inflation has been one of the biggest cool-offs that we've seen. From 32% last month, it's come down to around 23%. That's one. And I was just looking at food inflation. Food inflation too has significantly cooled off from what, about 8% in the previous month to about 6.5%. So together, fuel and food, have been on a declining trend, and that's what actually has taken the WPI lower from double digits for what, 17, 18 months to now 8.4%.
So very positive, and in fact the food inflation has just about softened to around 6.5% like Mangala mentioned, and that is one piece of data that we will be watching out for in terms of the CPI data this evening as well, in terms of a trend. Rupa Rege Nitsure, who is the chief economist at L&T Financial Services, joins in with her thoughts on the WPI data now. Rupa, hi, welcome to the show. What were your estimates, and what is your reading in terms of the WPI data at 8.39%, multi-month low?
Yes. It has come to a single-digit level after a gap of almost 19 months, which is a very long period. My estimate was 8.6% because I was seeing sequential easing in global energy as well as non-energy prices, and statistical base was also favorable. But as you rightly pointed out, the disruption caused by vegetable prices, etc., in the month of September, I think that has also reduced in October. So food inflation, easing of food inflation has also contributed to this benign inflation trend, relatively benign inflation trend for WPI.
Okay, Rupa, what does that, according to you, mean for the CPI data that we're expecting today, and specifically that food inflation number that we are talking about? And what are your estimates for the number this evening that we're expecting?
I'm expecting CPI to cool to 6.88% from 7.41% of the previous month, precisely because I'm expecting, inflation in perishables like fruits and vegetables also to ease relatively, and there also statistical base will become more favorable. We had seen, some spikes in last year in fuel and edible oil prices. So, compared to that, this time the prices are quite low. So that also will contribute greatly to cooling of retail inflation.
So what does all of this, Rupa, mean in terms of the RBI's policy going forward? I mean, how much of that will be dependent on these data points, and how much of that do you think will be dependent on what comes out of the US?
Yeah, that's a very good question. We have seen that, many other central banks besides US Fed, they have also started responding to their own growth inflation dynamics than just responding to the US Fed action. Bank of Canada, for instance, has reduced the pace of monetary tightening. And looking at Indian high-frequency data indicators, we are still seeing a lot of up-downs and flip-flops in high-frequency indicators for consumption. So, and two of the MPC members have already said that India needs to lower the pace of tightening because our demand situation is still fragile, and we should now protect the recovery. So I think for today's WPI print and expected lower print of CPI will certainly influence Reserve Bank of India's decision in the next monetary policy, and there is a high chance that they may reduce the pace of tightening from current tightening rate of 50 bps.
Okay, so what is that sustained trajectory that you expect, maybe, Rupa, from the RBI now?
See, there is so much uncertainty in global arena, and there are so many risks, downside risks to currency, etc. So making any prediction about the terminal repo rate or the future trajectory of tightening doesn't make sense at this juncture. But point is that RBI will go by the current cross-sectional information, and this is a good opportunity also, I feel, to Reserve Bank of India to revisit the pace of tightening.
Okay,
but the actual, pace of tightening will be influenced by all MPC members, and they need not have consensus on this.
Okay, all right. That point is taken that we can't really predict what the MPC is going to eventually do. But Rupa, do you think that we're out of the woods entirely when it comes to inflation? We've probably seen the worst?
I can't say that because global scenario is so uncertain that saying, taking a definite call on inflation print is very difficult at this stage. But I would say one thing, that in many things, India appears to be relatively insulated, and now the budget will also be a next event. So both monetary policy and fiscal policy together will ensure that growth momentum will be safeguarded, because everybody, appears to be of the opinion that downside risks to growth outweigh upside risks to inflation. So that augurs well for future policy making.
Okay, all right, Rupa, point taken. Thank you so much for joining us and giving us your take on what the current WPI scenario looks like and what we're expecting.